Low Warriors, dollar weakness continues. Believe that we're headed towards new lows. Take out that last low. Best guess 96.60 or so is what I've been looking for. No reason to change my mind. How you doing, Mike? Ingmar, Steve, Shahab? I came in and Ryan. All right. So let's go to this. So just want to show you what a candle could look like if it really does, if there's an event in the Middle East. So right now it looks like a false breakout in WTI. Need closes over this, not just intraday spikes. Um, I don't know what took it back down, but I'd say the tensions are rising. And 63 breakout, the formation's going to measure 71 if we get one. All right, so let's get to our specialty, our expertise here. So Euro followed through to the upside. This was kind of like a flag pattern that we had here. So here we are back above that resistance that Blake pointed out. I still think that you have to stay long Euro against 111 now. Okay. Yen making new lows. What did I want to show you guys? 10-year. 10 years pressing it again, these recent highs. And actually with TLT, I'm looking at potentially getting long. Look at the divergence here. I'll probably do with TLT calls. There's drive 1, here's drive 2, and here's drive 3. In the face of that negative news, would almost like to see what the market's reaction is if Congress could get through the big beautiful bill in the next couple of days. And everyone, tip of the hat to Blake and the team for a real nice short. Yesterday in the S&Ps, if we start taking out today's lows, that'll open the door. I still think 5,700 is viable. Blake, would 5,700 be about 38% back of this whole advance, this gap in here?
Did you say 5,500?
57,
Oh,
right here, this
5,700?
gap.
Yeah. I'll tell you right now.
All right.
Because I think 5,500 is doable. That's where I'm looking
You're
for.
looking for this, yeah. Yeah, okay.
Yeah, I'm looking for a retest of that. But now that it looks like we can, I don't want to say we can safely say because you can never really say that. Uh, but the 5,700 is a 24% retracement. That's
Okay.
basically it's your initial pullback, where I would think it wouldn't it wouldn't hold. But the 5,540 level is your 38% retracement, which is obviously within the vicinity of 5,500. So that seems very doable. And,
Okay.
and still keeping an uptrend intact, even though it's a pretty substantial pullback.
All right. Thank you, buddy.
Sure.
All right. Ryan, good morning. How are you?
Morning, sir.
So,
I'm doing well. How are you?
okay. So, is this important? What we're seeing in euros or Euro USD, or are we still in a corrective process, or is it a
Uh,
no touch for you?
yeah, it's a little bit in the mix. I keep saying we've got trends within trends within trends. This rally off of those lows still in play, still edging higher. Every chance we could go back maybe and have a look at that 115 level,
Yeah.
which is still my main level, and the important ones. But you can pick your points in this one. Where it runs into trouble, where it pulls back to 113 intraday now seems to be the
Yeah.
level you need to look at.
Okay.
Oh yeah, it depends on how you want to trade. If you're trading for 20, 30 pips at a clip, then you've got your intraday levels to look at. If you're looking for more, then you've got to be a bit more choosy, I think, where you want to get in.
Okay. So here we are back at the lows before the big rally in the dollar. So I see we're getting some tails down here at this support. Maybe we rally, but I think these lows give way. See this low here? So
Yeah.
even if we rally here, I don't believe we're going to have a double bottom because this low is confirmed. Cable, EG does seem to be trying to turn here, Ryan.
Yeah, we've been talking about that on the flow show today. You know what? I've had my foot off the gas with this one, off the pedal with EURUSD. What a solid hold down at that 84 level.
Yeah.
Perfect. Best part of a week we couldn't get through, and then you see a
Right.
bounce. So you got to look up. We just tapped 84.60, which is, if you look at
These
those lows, yep,
yeah,
bingo.
right there.
And also the highs just shortly after. That's where the bounces couldn't get through. So we've pinged that 84.60. It's a bit of an intermediate level. Then you're looking 84.80, 85, 85.20 is the big historical zone.
Okay.
You need to look at.
That looks big to me. That's a good eye. I mean, we start closing over that, almost makes this look like, couple weeks of a false breakdown
Yeah.
because this was a big area, right? So if we get back above it, could look okay.
Yeah.
All right,
But
buddy.
that's how
Any
this one. That's
go
how
ahead.
this one trades, doesn't it?
Yeah.
When it trades nicely, it respects the levels, really, really well, and it gives you time. You're not going to get, knocked out by the volatility in this one, so it gives you time to see what's happening.
Yeah, I always like trading Euro pound. Some people complain about the spreads. I've never had a problem with spreads on
Yeah.
Euro pound. Are they bigger
No,
normally?
smaller if anything, because it
Uh,
doesn't move.
oh, well, I don't know. This was a move. Anyway, so let's go to Kman and this Japanese yen did hold the lows. Um, I'm wondering what you think down here, buddy, on the yen.
I still don't think a lot, but the dollar yen has got a little push lower because
Yeah.
there was again this Korean headline that they would potentially talk even more about FX with Besson, and that's where the dollar got hit again on the back of it during about 2 hours or so ago now. So yeah, that is what people are looking at. What's happening at the G7, or I should better say, besides the official G7, what the other ones are talking about with the US, and it does seem that FX bit is coming back regularly, which is probably going to be quite a driver, and because yen really as well reacted to it, besides just coming down dollar yen because of the lower dollar. So this is something that we are going to have to pay close attention to, because the Japanese officials will, or at least are trying to meet with the US officials anytime between now and the end of the week. I saw Friday was also mentioned, but they could talk anytime. But yes, I mean, a lot of it will depend. In the meantime, dollar heavy. I'm not really seeing that anything should change, unless I said there's absolutely no agreement. Japan comes back and says, "What can we do about it?" And then we'll probably have like a one or two big figure rally. In current context of the dollar door, if he would get that 146 or so back on a knee-jerk reaction against a potential no FX mentioning or something like that, it may perhaps be a good idea to lean against that level right now.
Okay. So I know you've been scalping gold from the long side. Had a big day yesterday.
Yeah. And
What?
tell you what, it was a great scalp until the last, but I missed nearly $40 of it compared to the highs.
The blink of an eye that happened in too,
Yeah,
right?
I thought, breakout of, well, that's
They
smaller.
were waiting for you to get out before the acceleration took place.
Yeah, but I
Uh,
was, yeah, I was scalping it from the low side, but by the time it came
you
in,
ever feel like that?
sorry?
You ever feel like that? The market was waiting for you before the windfall to get out before the windfall.
Oh, Blake, more often than I care to remember, my career. I mean, come on.
Yeah, I
Well,
got
and most of the time when you're in something, you have the feeling it's on the wrong horse. The
yeah.
rest of the market go, the other pairs go against the same currency, you see.
This
Yeah,
looks like a
Blake,
big area to me.
around here.
Yeah, because I mean,
Yeah.
this failing rally was pretty stiff, right?
Mhm.
And this one doesn't have the same type of mo
Yeah.
that this one had. We'll see.
Yeah.
What do
It's
you
right
think?
here actually, 33.15, and we're trading around.
Yeah,
That's probably, I'd say, a failure. You could be back at 32 and a half relatively quickly. But if it goes, you're looking at
yeah,
high 33s back into the 34. So
yeah. Um, Gold silver ratio really has gotten quiet.
yeah,
Silver
they,
actually
they
looks
really,
better on,
mm,
the chart looks better
yeah,
on the day. Well, they look the same.
yeah. We've got a bit of resistance there in silver, just around that. You see, where just around that 33 and a quarter there.
Yeah.
One, two, three highs before really needs to go through there to continue. I haven't done anything really with my long term and the ads. I'm just waiting. Just waiting on what's to happen here.
Kind of looks like a flag, don't you think?
Could do or
I
just
mean, we have a big flagpole, and
could do or
it
just
hasn't given up anything.
mm, yeah, could be. But if you if
Anyway,
you if you draw the flag, then we are trying to break, and I'd argue we have to wait for another 10-15 cents to confirm.
yeah. Oh yeah. The
In the
king.
low.
I'm the king of false breakouts. Being with them, So anyway,
Yeah.
uh, let's cover anything you want to say about China. They're
Nah.
not manipulating their currency to make
Well,
it
I mean,
cheaper.
who is manipulating its currency, Dale? Or should we say who
Everyone.
the list of who is not manipulating their currency is probably a lot
Yeah.
smaller than the ones who do.
Yeah. This is back under the 200. Does
Yeah,
that
I mean
mean
it's hanging
anything?
around at 720, and the rate cut didn't take it more than 150 pips away. Trade talks, we are waiting for what's going to happen there. Yeah, I mean, forget the Chinese yuan just for now. Wait, if you really want to do a long term play, you either wait for the break of 7 or 740. But um, you can play it both ends. You can actually, if you think that China is still going to manipulate its currency lower, if you see some kind of positive trade news and you go closer to 7, you can try and pick it up there, and then hope for them to step in and take their currency much lower. But if it breaks through 740 again, I think this time it won't stop. But we're in the middle, right in the middle.
All right. Okay, before I hand it over to Blake, I just want to show you guys the Widowmaker is at it again. Between yesterday and today, we're up 10%. And it had a nice move. I was on it last year, and maybe this whole thing is just, yeah, consolidate. Went from 2 to 5, and look what it pulled. This looks pretty good, guys. I don't know if you could, if you don't like the beta, do some due diligence on some natural gas stocks. There are royalties you could buy. I know a guy, I know it sounds ridiculous, but he's looking for 30. Okay. So, you know, if anything, just this move right here, say this was 1 and this is 2, so 150, 3.5, 6. Could you see it up here? If it's a wave 3 developing, everyone get it? See it? I just, you know, so I just go up and down my screen every day, but I saw this was up 9% yesterday. If you want to look at how it looked at it, like intraday, here's the 4-hour. So I think there's something there in natural gas. I know Nasser Haji's been bullish LNG, and I think Tracy also is a natural gas bull. So it looks like it completed a correction after a big one up, and I think people need some energy exposure. People are pretty negative. It seems like everything's under control with energy, and I know right now WTI looks like a false breakout, but this happened in like, I don't know, 30 seconds, and I still think we're going to get a breakout. And this will just give you a feel for what could happen. There's no geopolitical risk in this yet. There's no premium. So, Blake, do you think that the S&Ps would like, how would they react to military action in the Middle East, in Iran?
Well,
Let's
the
be
knee-jerk
specific.
reaction is always down,
Yeah,
right?
yeah,
And then the market goes, wait a second, that doesn't involve us. So
yeah,
then they bounce back. And then, but Iran would be a different story. I mean,
yeah.
that's, you know, you're talking about you know, a nuclear situation. So I don't know. I mean, the
Yeah, I
initial
don't
the knee-jerk would be down, and then, you know, how we respond after that, I think depends on escalation or de-escalation. So
Okay, well, nice trade on are you holding your S&P short on the,
yeah, I'm keeping the risk off theme. Let's just put it that way on what I'm doing. But yeah, we have if I showed this yesterday, and I very rarely put this out there for everybody to see, just because this is private stuff for the Forex Analytics subscribers. But these are our patterns in play that we have going on right now. And you can see Andre's got some, Leandro does, Grega does. You know, we have a lot of, you know, playing, you know, in different levels. Are you okay, Coach?
uh,
Are you coughing or are you okay? Oh, okay. Sounds like he's
I'm
coughing.
okay. I'm
Oh,
okay.
okay, good. All right, just make sure you're right over there. So yeah, we have some, you know, some developments that we're taking advantage of. You know, one of the things I think this has been one of the more surprising things to me, you know, regarding risk appetite is that you've seen, well, I should say it's surprising, but now you're seeing that continued outperformance in the European markets, and I think after the Moody's downgrade this week, you know, the DAX just said, "Oh, well, we're going to continue to go higher now." Now, obviously, you know, today we're seeing a little bit of a pullback here. So, you know, just in some of these European bourses, but I think we need to watch the S&P as it's coming out of the ascending wedge. And as Dale asked a little bit earlier, and I'll just show you what I was looking at, just so everybody, you know, has a view of it. You take the lows to the most recent highs, the 24% retracements, 5,700. As Dale asked, what was there? That's the 24% retracement. 38% retracement is around the 5,500 level or just above. One of the things that jumped out to me though overnight is the resurgence in some of these these Asian currencies. I know you guys were talking about the US dollar CNH. Yeah, the CNH is starting to build up a little bit of steam, but take a look. I know the Taiwan dollar was on everybody's radar, but look at the Korean won and look at the Singapore dollar. They're actually starting to gain strength again against the dollar. Do you guys, Ryan, Kman, do you guys make anything of these Asian currencies starting to percolate again? Is it something that we should be watching out for? I know, Kman, you're leaving, so maybe you want to answer before you split.
Well, I mean, it's what happens on. Maybe they can they can orchestrate some kind of things, but are you really even Korea? Are you really want to start selling dollars in your open market? I think it's something that speculators will have to do for them. Um,
Well, yeah, I'm not
give
worried
me
so
a
much about
different.
like trying to trade it. It's what is it showing when these Asian central banks let their
Well,
currencies actually rally. That's the thing.
it gives the market the impression that the Mar-a-Lago deal for a weakened dollar is still very much alive because we see all the rest reacting to it as well. When we had the line about the Korean won this morning, every dollar got hit. So that gives the market the impression that the Mar-a-Lago deal is very much there. And yeah, but then for the rest, how to trade it is a different thing because every time we see it, the majors at least they don't see too much of a follow through. But it could be yeah it is significant in a way that the market does respond to it. If the market would shrug it off completely, we may actually look at the other side. But the market does seem to trade it and have ears to it. So that is something that is still an ongoing somewhere question mark.
Yeah.
We are
And
we are in
go
the
ahead.
middle of those G7 meetings. I don't think that officially, well, official because I mean European countries will never openly agree, and they will never agree anyway, to let their currency strengthen too much. Because of a deal. So forget. People are always talking about yeah what is it the deals that we had in the 1980s, the Louvre Accord and the other one. Forget about it. I don't think we're anywhere close to that. At least not as official deals, or plans to let the dollar weaken. I mean, nobody's going to sign up for it, apart from perhaps a few Asian countries because they want to not to be tariffed too much, and they are probably going to give in to something.
Okay. All right. Well, thanks for your comments. I know you had to run out a little bit earlier, Kman.
Yep.
And let's just note that the move in the euro happened in Asia last night. It was during Asian trade. I was trading the breakout above 113. We were if you're in the Forex Analytics chat room, you can just go to, where, we were trading, last night and adding positions and selling them. I mean, and all of this is taking place in the Asian markets. And if you guys if you guys don't have access to this, remember we have a liberation offer with Forex Analytix. This is we're going to be winding down this offer. We have backed up our prices on a monthly subscription back about 5 years. It's $3 a day. You guys should take advantage of it. This way you have access. When Bloomberg goes down, you have access to Live Squawk feed where you're seeing feeds from different sources, not just Bloomberg. Plus, you get analysis of 30 different instruments and not just currencies. So we cover everything from the 10-year to boons to Bitcoin, you name it. So Ryan, how do you feel about these about the dollar, really starting to lose strength? And by the way, I know we were just talking about Asian currencies. We were just having the Korean won conversation, and Taiwan dollar, I think had everybody's attention a week ago. So now it's not on now everybody's focused everywhere else. But you're seeing currencies like, look at the US dollar, Norwegian krona. This is a fresh low. We are literally breaking down in the US dollar, Norwegian krona right now. I mean, how do you feel about the dollar at this point?
Absolutely fine. If we get market moves, we know that what's going on in the dollar. We know what's going on with trade. The only missing piece of the jigsaw is the data, which isn't rolling over yet.
Holy shit! If you throw on some weak data, like some real hard data, like jobs reports, we start losing job. What's going to happen to the dollar then?
Well, this is what I've been saying. We've been watching the sentiment data for the last several months. It's getting stinky. Even the Fed members are talking about it now. And I said it's going to be 1 to 3 months before we potentially start to see that coming through to the real data, and that was a few weeks ago. So we're in month 1, and retail sales last week wasn't horrendous, but it wasn't good either. So maybe we're at the start of it, but like you say, if we get a few bad data points coming in, and I think it was Bostic. I mean, he's spoken about 50 times this week, but he said yesterday that firms he's been speaking to can no longer delay holding off on prices and employment due to what's going on in tariffs. So it's the elastic band effect. Everyone's sitting on their hands waiting to see what happens, and the longer time goes without deals being signed and concrete stuff happening, then businesses are going to be forced to react, and we're in that window now. So I fully expect to see the data, the hard data, starting to see the impact from all this stuff. And if that's the case, then the dollar's probably in for a fresh wave of selling.
And just I know we talked about this the last couple of days, but let's refresh. We have a bear flag pattern in the dollar index. Now we're trading below 100. The dollar index does point to the 90s. I mean, and Dale, you look at these targets that we have in the dollar index. If this bear flag plays out, I mean, I don't think we're going straight there. I think this is a 2025, what year are we in? 25 story. This is a 2025 story, but the bear flag pattern points all the way to like 89. So, or 90, I'm sorry.
I think from 96 we'll get a rally back to above where we are now. Before that happens,
I first of all, I agree that we get a reaction from 96 that is a long-term, it's a long-term major trend line. So I would expect.
Oh, that's what it is. Okay.
Yeah, I would expect some sort of reaction from there. Now
I think Greg is looking for lower.
Greg,
I think, is looking for 94 or 95.
Yeah, like I see like a little bit of bounce here. I don't know if we're gonna bounce that aggressively. I guess that really has more to do with the data. I wish I had a crystal ball and could foresee that far, but I do think that we would get a reaction from that level. But this is like ultimately, if you think about like this is what I was. If you were listening to the daily roundup the last couple of days, I'm like, we should get a reaction here, but it's going to be one of those, this is what 2026 is probably going to look like. It's not going to be straight down. I mean, unless there is a Mar-a-Lago accord. I said record. Unless there's a Mar-a-Lago accord for real, which everybody's just kind of trading into that, assuming that the Trump administration wants a weak dollar, and this is just Trump's going to get what he wants and he's going to get what he gets. So everybody thinks that is going to happen, unless there's some real accord that's actually put together. It's probably going to be a very messy move down towards 90 if we get down there. But there was one other thing.
Keep an eye on what's going on in Japan. We're getting to the point now with yields that they could be getting into serious trouble for the Japanese, at least. 10, 15 pip moves in US yields is nothing. It's an average day, but when it happens in Japan, it's a big deal. And
why? Because their auction went off without it was an awesome auction, best auction they've had in 20 years. What I'm reading.
Yeah, but look at yields.
I was joking about that. That was actually their worst auction they've had in 20 years. I mean,
one we hadn't.
Yeah, so yields are ripping. I was trying to be sarcastic. It's 5 o'clock in the morning. It's too early to be sarcastic here. So yeah, I mean, yields are JGB yields are just ripping right now. So what happens here, Ryan? What's the worry?
Well, the worry is that obviously costs.
How about there? What's the worry there?
In Japan?
No, or the UK. Which
don't worry about
Mark was talking about in our chat room. No, this is a worldwide problem. It's not just Japan. But anyway, go ahead. Continue.
Well, it's obviously going to start in Japan because their government borrowing costs are going higher, and you've got the Bank of Japan who wants to get rates up, which obviously adds to yield as well in interest rates.
Yep.
But now they're seeing they're getting the worst outcome where yields are blowing up without them hiking. And they may be forced to step in, and yields going up means that the yen is strengthening. There's risks that investors get out of US debt and bring money home to Japan. or we get reallocations and whatever. If there's problems in Japan. So now you've got a Bank of Japan who potentially might have to intervene in bonds, which would weaken their currency, which is the thing they've been trying to fight against for the last 10 years and more. So they're whichever way they turn, they it's like Simpsons and Sideshow Bob when he turns around and steps on another rake. That's what the BOJ's like at the moment. Every which way they turn, they face a problem, and they've got to try and navigate their way out of it.
Did you say step on a rake? Like when you step on a rake and it hits you in the
Yeah,
face?
you ever seen the old Sideshow Bob clip when he steps on like 30 rakes?
That's funny. But this seems like, look, here's U.S. 10-year yields about ready to break out. Here's your JGBs. Here's gilts. I mean, yields are going up everywhere and scary. Hey, one last thing I wanted to point out, Dale. I know you have your interview. Do you have an interview this morning? Just want to make sure.
I have Jamie here, Reuters.
Oh, cool.
Jamie.
Oh, okay.
Reuters.
Oh, Jamie. Oh, well, Jamie's
Hey, Blake,
Jamie's feed didn't go down, did it? No,
No.
but real quick, it's nice to have Jamie here. Jamie's son is
You know what this is, Blake?
What's that?
It's a Dale Accord.
The Dale Accord. I like the Dale Accord.
Like it.
No, hey, one thing I wanted to just ask Ryan about. I mean, we saw, the inflation data in the UK was hot this morning.
Yeah.
What's that? Why'd sterling come off? I mean, yes, it's a little bit of a false breakout. I was telling traders in our chat room, like, there's no fucking, whoops, excuse my language. There's no way I'm going to be shorting that thing today with the euro above 113. There's no way. Not with the hot inflation data. But why did it turn like that?
Well, it popped on the data, but
Yep.
the dollar was weakening anyway, so it was just an added win to the sales.
Yep.
But it's like data at the moment. You know, it's traded very quickly. The algos hit it, and then the market gets back to doing what it was doing before. But it's, as usual, the data's far more worse for the Bank of England than they'd like, even if they were expecting a little bit of a pop in inflation.
Sure. All right. Well, thanks, Ryan. Hey, I don't want to take up any more of Jamie's time here. Dale, I know you have your interview with Jamie, and like I said, Jamie's with Reuters. So Reuters didn't go down overnight, but Bloomberg did. So, I think everybody should be following Jamie. And
yeah,
for the news.
Jamie. In fact, last time Jamie was here, I think euro was trading 104. Something like that, 105, and he was talking about how the euro could start heading higher, and it was a pretty good call. He says he's wasting his time as a reporter and writer. He should be a trader.
He should be a trader.
Right,
hey,
Jamie?
Yes, absolutely.
Hey, Jamie, real quick, I got to say this just because we have some personal stuff in common. Jamie, best of luck to your son, the club soccer player. My son just retired his boots this season, even though his team's going to nationals here in St. Louis, Missouri in a month. My son's not going to be joining him because he closed up shop, even though he got a bunch of collegiate offers and even a couple of D1 offers. He's not doing it anymore. So enjoy the ride with your kid, Jamie.
Well, thank you very much, and all the best to your son as well. It's an early retirement, but all the best to him.
Thanks, buddy. Yeah, he'll be at Ole Miss, so he's going to enjoy himself there. All right. You guys have a great interview.
All right. Well, thank you, Ryan. Thank you, Kman. I know you're not here, but I'm thanking you anyway. And Blake, thanks. Nice roundup today. I think we hit some major points. The dollar is low, Jamie. That's a McDonald's commercial. So we'll know the dollar's hitting the bottom when McDonald's starts advertising $1 burgers and stuff. So
Walmart's taking a bit of a hit, isn't it?
Yeah. Is that what's going on? I mean, look, a lot of there 96.80. Yeah, it's down $1 going into it, but
Well,
Did
certainly,
they
I think they
ever?
just issued. I think they just issued another warning, a profit warning. They've had obviously they've
Okay.
been on the receiving end of comments from a certain person in Washington.
Okay, because they're going to pass on prices and not eat it. Yeah, he
I think
wants
so.
every
Yeah,
retailer to eat it.
yeah, he certainly does.
Yeah, and
I think
they're not.
Walmart's profit margins, if I'm not mistaken. I mean, I don't follow equities, certainly company single stocks too closely, but I believe Walmart's margin last year was about 2.5% profit margin.
Yeah, yeah. And you know what? Look at all the restaurants, Jamie. So, all right, first of all, a great call on the euro because you saw that.
I don't remember it. Honestly, I don't recall
Well,
that. But if you say so, I'll happily take that. Thank
all
you.
right. Anyway, you were talking about a higher euro because a lot of people were pretty bearish euro back then, and
Yeah, I think as you say, we were at 104, and all the talk was of parity is coming within sight.
yeah,
But
yeah,
I think at the time people were just too heavily skewed one way. Positioning was maybe, and sentiment was overly bearish. And to be honest, just before I came on today, I was looking at positioning and sentiment on the dollar, and I think it may have. I mean, from what I can see, some of the basic indicators suggests that we may be overly bearish, certainly from a short-term point of view on the dollar, looking at CFTC data, spec data, and I don't know if you saw the Bank of America fund manager, they had their monthly fund manager survey last week for May, and if I've got this right, I think dollar exposure was a 19-year low.
yeah. There's
So,
extreme pessimism with the dollar, which
yeah, and I
makes me
think there's
think we're getting.
obviously. I mean,
Go ahead.
there's good reason to be bearish on the dollar, and there's a lot. There's a lot of headwinds, but that how much of that is already in the price, and from a short-term tactical standpoint, which is what
Yeah,
you guys do, maybe things are a little bit stretched.
117 is my target in euro, and then it'll pull back.
117. Where are we now? 113.
Yeah,
So the next four pips, four big figures to the upside rather than the downside.
yeah,
And you might get some
yeah.
people taking under on that.
Yeah, I'm sure they will. I just look at here's a Dixie here, and uh, this last low that we had here before the bounce here
Yeah.
was not real strong. This was just to me a bear market rally in the dollar, and we're headed to take out these lows in my view. Maybe only by 100 pips. Okay, so the old high in euro was what, 115? So maybe it's 116, 117.
Right.
I'm looking, and this could be like 96, 96 and a half. So that too would be another 300 for euro.
Well, the rate
So
expectations they've certainly moved in the euro's favour maybe since the last time I came on. I think 3 months ago, what were Fed rate expectations for the year? Maybe 4 cuts.
yeah, now
Imagining.
none.
Now, well, I think it's still 2, but the first one being pushed back now to October.
Okay.
And the ECB is also 2, but if you look into next year, the euro rate curve, that's it. No more hikes. That will be the terminal rate, just 2 more cuts. Whereas the Fed has another two cuts priced in for next year, so 100 in total.
Okay. Why don't we get to the Moody's story? And I freaked myself out, Jamie, because I was thinking of narratives in the bonds. And last Monday, I put out a tweet because I was thinking I saw a senator interviewed who's not voting for the plan because there's not enough cuts, and the shape the bonds have been in, sitting near the lows. Thought just came to me that the package wasn't going to have enough cuts it was just going to add to the deficit, and Moody's was going to downgrade the bonds. I put that out Monday.
Yeah, well, you're spot on. I mean,
Yeah, I don't even know why. I thought Moody's would do it. Probably because they were the last ones to
they put
make a
them on
move.
watch. It was 2023, I think they've been on watch or negative watch. So it's, I mean, nobody can claim surprise, certainly.
Oh, okay.
Maybe some question marks over the timing, but there's always question marks over the timing with these things. Everyone thinks they're always, politically motivated, which may or may not be the case. But I think they've been on watch for nearly 2 years.
So here they are. Here's I use TLT as a proxy.
Yeah.
And here's a 10-year, and looks like we're about to make a new high right up here. We're diverging, but what do you think? Are we going to 5?
10 years, 453 as we speak, 454.
Yeah.
Well, 5. Some people are saying 5 by the end of the year. Mm-hmm. What's that? So that's less than 50 basis points in 7 months. I think given the scale of some of the moves in the last few months, you wouldn't say that's an outlandish forecast by any stretch. However, 450. A lot of people are saying 450 is a good level that will attract buyers, whether it's at auction or in the secondary market. I think 5 on the 10-year would certainly draw in the buyers, because I think just over 5 was the high from, I think, was it October 2023? Is that right? Going back to that. So we're getting 18 months, 2 years. And that's the high, I think, going back all the way to
right here.
I'm guessing the the global financial crisis, I think. So 5
well,
is certainly a big level.
Here's a high from 23.
And what is it on the year?
October. It's a 5001.
Yeah, it's just over 5. So 5 is clearly, it's a psychological number. It's a big round number. All that, if you put any stock in that, but it's the historic high, and I think going back, this last time over there was 2008 or something.
Oh wow!
So it's a big level, 5. I think that will be. I'm no bond trader, or FX trader for that matter, but I think that would be certainly a target for some funds, surely.
Okay, because I'm looking at. This is a pretty bearish weekly setup, especially if we close under 85. But short term, I'm seeing some pretty nice divergences. We made a new low on the downgrade, but momentum didn't. And we're about to make another new low, and momentum's making another higher low. So this tells me at least not to be short right now. And that there could be some kind of. Can you think of a narrative that would give the bonds more than like a point or two bounce? Can you come up with any bullish case for bonds? I know there are a lot of people holding bonds, Jamie. They almost feel proud of it because they missed the 20% sell-off in S&Ps, but they've also missed everything else sitting in bonds.
I mean, people, funds have to hold treasuries. It's a $29 trillion market. It's so there's a lot of bonds out there. Maybe that's part of the reason they're quite cheap these days. But there's a lot of bonds in the market. People, funds of all stripes and inverted of all nature, they have to hold bonds for portfolio construction and for regulatory reasons and market makers, and if foreign central banks, sovereign wealth funds, reserve managers, etc., etc. And so it's a huge part still of people's portfolios. I know there's the whole narrative of de-dollarization and people rethinking their exposure to US assets. They've lost their safe haven status. I don't think...
That's what I mean. There's nothing but... that's why I was wondering if you could be creative enough to come up with a bullish case for bonds, because... what you rattled off is what we're hearing. There's there's no reason to buy bonds.
That's the narrative. But look, it's the US Treasury market, and people can have their views on the Fed or Treasury or Washington and their fiscal discipline or lack thereof. But people will always buy treasuries. There's the whole debt, the whole US deficit debt implosion narrative has been doing the rounds for 40 years. It hasn't happened. That's not to say that fiscal discipline isn't important. I think we've spoken about this in the past, but it's just a question of the clearing price. We have an auction today, for example, the 20-year auction coming up. It will sell. there's no risk that this Treasury won't offload its bonds. It will be bought. It's just a question of the price. So a buyer's strike, I think, is a bit it's a bit over the top, that kind of language. You won't get a buyer's strike. What you will get is, buyers asking for a lower price, and obviously therefore higher yield.
Higher yields, right? Okay.
And we have had higher.
So is
yields
that
in
the only
past.
bullish argument we could come up with, is because the treasuries are deep and people have to own them? What
There's
would
no risk of
what
default.
would generate?
There's no risk of default either. So that's, I think we can park that one. I'd be happy to be told otherwise. But the US Treasury is not going to default. So there's no credit risk as such there. There may be interest risk in holding treasuries. Duration is, as you guys were talking about earlier before I came on, duration is not just a US problem, it's a global problem.
Right.
And but if anybody is going to pay back pay your coupon and make sure that they don't default on you, it's probably going to be the US Treasury, I would say. Now those are sort of big broad sweep arguments, and some people may not be convinced by it, but I think once the price goes low enough,
people, well, they're pretty low.
Talking about 5%, if we were to hit 5% in short order, I think you would see waves and waves of cash coming into US Treasuries.
Okay. There's an interesting survey. I forgot who they were, as far as the organization, but in the heat of the Liberation Day, 60% of them believed we were going to have a recession within a year. And now 60% believe we're not going to have a recession in a year. Do you think that just the 90 days and the rollback of extreme tariffs is going to fix things? Do you think things are fixed, or this is really a lot of hope?
Man, I think there's
Hope rally.
Hopium's not a strategy, is it, really? But there's no question that the most dire scenario has been sort of taken off the table, or it's certainly been we've pulled back from the brink, from the edge of the cliff. However, it is worth pointing out that this, as you say, the 90-day agreement is not really an agreement; it's just a sort of ceasefire, isn't it? So we've got 90 days to come up with a more concrete agreement. We're not looking at a complete trade embargo like we had been. 145% tariffs, all that's kind of been set aside, and we probably will get some agreement. However, it depends on your starting point. If you're comparing that to where we were on April 3, 4, 5, yes, things are much better. However, if you compare it to December 31st, before any of this, these tariffs were kind of being discussed, even though Trump had campaigned on them, we'll still be looking at a weighted average tariff rate of the US for imports of around 15%, and that's 6 or 7 times higher than they were at the end of last year. It was barely 2.5% at the end of last year. So at some stage, that increase in tariff has to bite. And as we were talking about Walmart, Walmart may be passing on those price rises to their customers. The earnings season was quite good, the Q1 earnings season, but a lot of firms were, giving profit warnings or, pulling their forecasts altogether just due to the uncertainty. So I think the recession odds have come down, but if you're talking 30% chance of a recession or a 45% chance, what's the difference really? There's always going to be some chance of a recession, and economists of that 30 sort of, or 33 split between recession, possible recession, or no recession. It's much of a muchness, isn't it? So I think the crunch comes around July, when we get it's July 9. That 90-day rolls off, and then we see the sort of the meat of that agreement between the US and China, put some meat in the bones, and also then we're getting into the debt ceiling issue comes again. I think the deadline's in August, so that July-August period is going to be that things are going to heat up a bit again then. But I think for now, the next 6 weeks or so, things have certainly settled down. However, as you say, the hope or the optimism. I'm just looking at some of the charts. I think the DAX, for example, is up 30%. The DAX up 30% from April the 7th. Now that's
30% outperforming the US.
Absolutely,
the weaker dollar is part of that.
But 30% in 6 weeks. I mean, is that based on fundamentals, or is that a sort of momentum rally that's maybe gone too far? And other markets have also. I think the Nasdaq's up 20% in the last 6 weeks or so.
Yeah.
So these are big moves in very short periods of time, which may have to, some of that steam may have to come off a bit.
Okay. What about? Do you have any sources, or do you even cover what's happening in the Middle East, say between us and Iran?
No, that's not my area of expertise.
That's not your wheelhouse. Okay, all right.
I mean, but in saying that, the oil price is obviously something that I pay quite close attention to, and I know oil's been spiking up a little bit. I think was it today it spiked up on some of that
last
chatter.
night. Yeah, right.
Last night.
Yeah.
But if you look at, I mean, what economists look at, from an inflation perspective, is the year-on-year oil price, and I think
it's the same
on the year-on-year. No, I think year-on-year oil is about 20% or 15-20% lower.
Okay.
If I have that correct.
Okay, so we were near 80. So we were probably near. We probably talked about that. We were near 80. So. Let's see,
I have it in front of me here.
2024 in May.
20%. Brent crude. Brent is 20% down year on year.
Yeah. So here we were last May. About $80 on WTI.
And WTI, is that still down similar?
Yeah. Yeah. And these are the lowest lows. This with the crash, we had to wash out under the support level, trying to reclaim it.
Yeah, 21%. I think WTI is 20, so 20% down year on year in oil, and that has an impact on inflation. It's one of the headwinds to higher prices. I mean, there's clearly tailwinds to inflation, which we all know about, the tariffs, etc. And consumer expectations are the highest since the early 80s. Make of that what you will. The soft data doesn't always translate to hard data, but it can't be ignored. However, one headwind to inflation right now is the oil price.
Okay. What's your view on what's happened with some of these Asian currencies against the dollar? Here's a Taiwan dollar. It's been happening with the Singapore dollar. Some of these periphery Asian countries where their currency is, really accelerating against the dollar.
Well, especially the Taiwan dollar. That was a remarkable spike. When was it? Early May sometime?
Yeah, I think it was last
2
week.
weeks ago.
Okay.
It was about nearly 10% in 2 or 3 days,
right?
Which was the biggest rise, and I think that was specific to the Taiwan dollar and insurance company flows and hedging issues there. But you're right. In the last few weeks, some of the Asian countries have bounced back. The Korean won, for example, is now up 4% on the year. But as always, it depends on your starting point. The US dollar has done better against Asian countries, EM Asia, since the start of the year. It's obviously fallen more against some of the developed countries like the euro and sterling. But against Vietnam, it's the US dollar still up for the year. Against the rupee, it's still up, the rupiah. And so I think there's pressure on Asian currencies maybe to rise because some of the chatter, some of the narrative is that as part of this, some of these trade talks, Asia might have to agree either explicitly or probably implicitly to let their currencies revalue as part of the trade agreements with Washington. So I think that's one to watch. These countries deny it, of course, but I think the pressure on the currencies, these Asian currencies, is probably to the downside. If we think that the US dollar may be overstretched as well, that'd be a short-term play though.
Okay. So here we are, end of May. What are your expectations for July? And even if we get trade deals, isn't it kind of like you had an engine that was running fine, and then something gummed up the engine, and even though the engine can still run, it's not the same, and it doesn't run as efficiently. That no matter what happens now, there are going to be all kinds of speed bumps and kinks and supply chain issues, and we should be ready. Maybe shortages for anything, no matter what the
Well,
number is.
well, those are the extreme scenarios, aren't they? Shortages and empty shelves, etc. Who knows? It depends. Depends on what kind of trade deals are struck and where the tariffs are settled, and can companies, and can businesses eat those tariffs, or how much is passed on?
Yeah,
I
that's
think
what I mean. There's so many unknowns.
yeah, yeah. Which begs the question: is if the uncertainty is still so high, although maybe not as severe as it was 6 weeks ago, but if uncertainty is still so high, how come Wall Street is back up flat for the year? Why is S&P trading at 2021 times earnings, back up to those kind of levels? Is that maybe too much optimism or complacency in that price?
Yeah, maybe there was too much fear down there because of tariffs. But I know people say we had problems before the tariffs even came in, economic issues, that the economy was had some weakening. We were in a manufacturing recession, consumer confidence. I mean, all these things were happening before the tariffs. So
That's true.
just resolving the tariffs does not resolve the problems we had before it. So that may be the whole thing, because everyone thinks things are okay because of uh, rescinding a lot of the tariffs, but there are other issues like
Well,
downgrades.
is the
You know,
downgrade an issue for the economy?
I think eventually it could be a confidence issue. Yeah, I think it's a confidence issue. We just looked at gilts and everything. I think there may not be defaults, but you could still have a sovereign bond crisis and still not default, but have your paper depreciate quite dramatically.
That goes back to what we were saying earlier, doesn't it? I mean, the risk of default is low, despite what you might see in the CDS curve. But it's clear that investors are demanding higher premium, a cheaper paper, and of course, for a country that depends on the kindness of strangers, as Mark Carney once said, like the US and the UK, for foreign inflows to fund their deficits, that's more important.
Also, we've had a 10% decline in the dollar. That figures into the equation.
Yeah, well, that's the de-dollarization, isn't it? It's and it doesn't take much it doesn't take much for those investment flows just on the margins. It's the marginal buyer. I mean, foreign investors, as we discussed, they aren't going to dump all the treasuries. That's just not going to happen. China's not going to sell all its treasuries. It's not going to not have any exposure to the dollar. That's not going to happen. What it might do is just on the margins, that half a percentage point or two reallocation over time into other currencies. That's when it will hit.
Will a central bank ever sell its gold?
Central banks are buying gold, aren't they? There's a great chart. There's a great chart from SocGen a few weeks ago showing China's treasury holdings, nominal treasury holdings versus its gold holdings. It's like an alligator's mouth wide open.
Right.
One's going down, one's going up. It's fairly obvious which one's which.
Right. Huh. All right, Jamie. Well, I'm showing people where they can follow you. Is there anywhere on Reuters where they could specifically go to get your column?
Reuters.com is a place. I don't post really much on Twitter or X anymore. Step back from social media after doing it for quite intensely for many, many years. But Reuters.com.
You know how many trolls miss you, Jamie?
Not as much as I miss them.
Jamie McGeever, everybody, a guy I could ask any question of, and it's got a insightful answer for us, and appreciate
Apart
it.
from
There's
Iran.
what's that?
Apart from Iran. I don't have
Apart
any
from
insight into
Iran.
Iran.
All right, well, I mean, let's
Apologies.
go to your wheelhouse. I'll talk to you in about 3 months, say August. The euro's trading here at 113. Where will it be in August?
Oh, good question. Okay, so you were saying 117?
Yeah.
And I said somebody might take you on the under for the next 4 big figures.
Yeah. All right.
Okay, let's just for the purposes of this chat,
All
it's
right.
on camera and on record. I'll go 109.
109. Okay, so we'll
And you say 170 or
we'll bet a cup of tea.
how's that?
All right, you're on. All right, Jamie and I this is a lot of pressure. My hair's gonna turn gray overnight. Jamie, thanks so much for being here today, buddy.
Thank you very much. Cheers, Dale. Thanks and all the
All right,
best. I'll speak to you in 3 months.
All right, thank you very much, Jamie and everyone else. Good hunting, everybody. I still think there's more downside in the dollar. Keep an eye on that 63 level in WTI. See if we could get it. So they're thanking you, Jamie and Mandy. All right.
Thank you. Very kind. Thank you, everybody. Have a good day.
Buddy. Take it easy, Jamie.
See ya.
Everyone,
Bye-bye.
don't just count your news features, count your blessings. I'll talk to you. See